morning, traders. I hope you're well. My name is Adam Harris, for those of you who don't know me, and today it's early Tuesday morning, I beg your pardon, the 23rd, what's wrong with me, the 31st of August, 2021 is the final day of August, and we start the first week in September, and there's already a shift towards winter here in the UK, very much just diving straight into autumn. So, having a look at the news this week, one of the things essentially I'm going to be keeping an eye on will be the OPEC meetings, which will be Wednesday onwards, and then effectively from focusing really around the US employment figures. All right, so non-farm will be this Friday, but even on Wednesday there's non-farm employment change as well, ADP. So this is really where I expect the single biggest kind of potential volatility to be in the markets this week. And I think at this point, let's go across and have a look at the charts. So starting off with the US dollar index, and basically as a result of the Jackson Hole meeting last week, we can just see that there has been a nice bearish engulfing candle. So seeing a lot of dollar weakness that effectively has come in here. We see prices well below that 93 level. And so this week what I'm going to be looking to see is, do we have a continuation of that? Do we continue to break below that? Especially, do we break the low of both July and August, the monthly candles? That would be quite a significant communication, I guess, from the markets to expect further weakening of the US dollar. But at the same time, I'm not convinced yet of this price action that that's the case. We are effectively, as I said, we are still range bound. And actually, I'm not convinced just yet what the outcome of that is going to be. So if we do find the price still manages to break back up above 93 and above the top of, or break the high of August, then it makes more sense to me that we're going to continue to see that dollar strengthening. But as I said, we are within a range, and therefore moves back down towards 89 are still potentially on the table. But again, the problem here is that it's just ping-ponging all over the place, and therefore to me, there's just a lot of risk in the markets in terms of shorter-term trends. So intraday trading, probably a better approach than swing trading, just because the trends will be shorter-term on lower time frames, so the 4-hour and below, rather than on the daily. So we've broken the downtrend on the daily. We're now effectively in a no trend phase on the euro dollar. Looking at it again, you can see here on the monthly basis, potentially now looking a little bit more bullish at the bottom of that range, and we'll see how it finishes. If it finishes as a strong bullish candle, that would then start to add a bit of weight to this, starting to work its way back up to the top of the range, and therefore dollar weakness. So then just noting here, looking at sterling. Sterling has got a higher low effectively on that weekly at a level of support. We're still back within that. We're still potentially producing another bullish monthly candle. So a lot of this really hinting at a stronger GBP and a weaker US dollar. So there is, there's something to support the idea of a weaker US dollar over the coming days. Again, looking at Australian dollar against US dollar, certainly it makes more sense to me if we can break above the 73.50 weekly level and then test that for support and even break through this little band of resistance that I've identified here. That would look very interesting to me in terms of buying opportunities. But you could see, certainly if you were engaging in this in the middle of August, there were opportunities to the downside, and then that completely reversed, gave all that back up for the tail end of August. And so, yes, the trends really haven't been just sticking to whatever they were doing. In fact, by definition, they haven't been trends. Looking at Kiwi dollar against the US dollar, breaking through that 70.50 level already. We have to really close above it, because you can see there's been attempts in the past and it's failed to get through that. But I think at this point so far, it's looking like there's a very strong possibility of that. And so again, look at that potential monthly engulfing candle that's setting up there as a potential. So let's see how that unfolds. But yeah, for me, that's going to mean weaker US dollar and certainly a stronger Aussie and stronger Kiwi dollar. Looking for possible buys on that. So looking at dollar yen, just a bastard to trade. Look at this, it's been completely range bound and all over the place. So for intraday trading, again, dollar yen, I stand by it. I say this all the time. It is the absolute worst currency to trade, and I just don't see anything going on there. And this is specific to dollar yen as opposed to other yen crosses. So dollar Swissy, again, also absolutely nothing else. So for the last 2 weeks, if you've been trading any of these majors, they've been obviously, there might have been some success on the first 4, but certainly not so much on the back 3 at this point in time. Let's have a look at dollar CAD as well. So dollar Swissy, they're just not really offering much clarity, very much range bound. And so that may well add to it. Once it starts to break out of this range, if it breaks to the upside, that would probably support the idea. If we're not seeing it necessarily on any of the other Swissy crosses, it's probably then supporting which way the dollar is more likely to go. So dollar CAD here now officially in a downtrend, or technically in a downtrend here, even though it is in an uptrend on the weekly. And you can see these candles potentially bearish on the monthly at this point in time. So not really offering much clarity there as well, but there are some possible moves down towards 1.25. So again, I'm exercising immense caution on that. And so just having a look at some of the possible currencies of interest. The list is quite short this week. Just looking at a really strong rejection of the support levels here at around about 149.40, and just noting how price is still in a, I want to say in a downtrend. We've got a high low here, so we have no clear trend at this point in time, but it's more bearish than bullish. But that potential here is setting up for a bullish move to the upside. So for me, what does that mean? It means that I'll be looking for breaks above 152, and almost certainly if we break above this level of resistance in here, then I'm going to start to become way more bullish on pound yen, pound Aussie. Similarly as well, coming back into this strong area of support and starting to look like it has every intention of breaking through that to the downside. However, that's obviously happened in the past before. It's attempted to break through and then close to the upside. So I really want to, in this case, see if there's ultimately a bullish rejection of these lows. Then there might be some potential buy opportunities back up towards this. But 1.9 is clearly offering some strong resistance. Alternatively, should price really succeed in breaking well below these lows this time, any kind of pullbacks on the lower timeframes could provide intraday opportunities to the downside. So it does seem to be some possible movement on the Aussie and Kiwi pairs this week on multiple cross charts as well, where they look as though they're very much looking to correct. And so on larger timeframes, and therefore on lower timeframes, or at least on the daily and below, there might be opportunities during the correction. So Aussie yen here as well, having pullback. So last week I spoke about the idea that a lot of these charts are kind of pulling back into key areas, and therefore I'd be looking for swing trades. The problem being that that if they were too obvious these days, that just doesn't seem to be the case. If all the trade setups are just too obvious and too easy, they seem to kind of just fall in upon themselves. And part of that is also because there's just way more people trading the markets these days. It's not a criticism or an excuse, just an observation that patterns that in the past generally would have unfolded more often than not, these days they tend to fail the other way. So especially here where there's kind of a break to the downside and then a bullish engulfing bar, and that just kind of kicks out any of the sellers who step in at this point and looking to take it short, and then the market kind of kicks them out. So at this point the market now looking much more like it wants to head back up towards 81. And again, if it starts to break through these highs, then I'm going to start to go look, be pretty much bullish on these Aussie yen pairs. The monthly would still then be in an uptrend, and therefore break above these highs, and a break above 81 on the monthly also confirms that idea, even though at that point the weekly would still be in a downtrend. So the weekly is still in a downtrend, and to break these highs here at 81.59. But certainly I think that the story is building in this case is going to be looking for longs to the upside. But overall, currency markets just not looking that great, not looking that appealing. Okay, so now moving on to the commodities, starting off with precious metals. Here's gold. So gold has managed to recover. So I was looking for a break out of this range. It did manage to break out and immediately sort of came back into this area, tested it for support, and finished much more to the upside. So this week, I'm liking the look of this. It's now starting to show its intentions a little bit more clearly. After that really strong bullish rejection, we still have to get outside of this range. So this range, this level of resistance still exists. I still want to be cautious of that. And why? Well, because, in the past, maybe last year or the year before, gold would have smashed its way through resistance levels. This year it has failed to do that repeatedly. It almost seems to just balk at any kind of resistance, and so therefore I'm a little bit more cautious. But I'm still leaning longer term bullish on gold, just in the shorter term and medium term as we approach these key levels. This is where I'm a bit more cautious. Trades up to those levels, and potentially once we break through, retests and continuations to the upside. So far looking like the most appealing, and hopefully that means that the monthly candle will finish as a really nice bullish candle. That would be great to see. But this is a bit of a mess up. You can just see how we were in a solid downtrend, and then of course price broke the low and rejected to the upside. Overall, though, looking way more bullish than bearish. Let's have a look at silver. So silver is now really starting. You can see it's found a really strong level of support at 23. Started to break these highs now in an uptrend on the daily. Higher lows, higher highs. Silver actually looking appealing on the daily here. And I very rarely say that because usually there's no clear trend. But if a trend is starting to show up in silver as well as in gold, that is very attractive to me. It implies that there is possibly a lot more move to the upside that can happen here if there's some dedicated buying. So also here, just noting this level of support in silver in the past around 24.78 to 24.80, and looking to see some potential moves to the upside there. We're still in a downtrend on the weekly. no clear trend. We're still range bound on the monthly. Technically a downtrend of lower highs, low lows, but I still count it within this range. And so therefore finding buying support off this makes perfect sense to me. So there we go. They're actually on my watch list. I quite like the look of that. Let's have a look at crude oil. So crude oil also having come up and started to break these previous lows, starting to look way more bullish than bearish. It had come back down and connected on the monthly, at least done a bit of a price correction. Let's have a look at Brent crude. So I spoke originally about if it did produce any resistance against these levels, there would be some possible short opportunities. However, it did actually just work its way all the way through that, breaking these previous highs, now looking way more bullish than bearish. So that is going to be of interest to me for pullbacks and looking for buying opportunities. But still want to see how price reacts at the 74 level at local resistance. If it can't get past that, then of course that's going to become its own issue. That's a separate story. But for now, looking for intraday opportunities to the upside and then see how it reacts when it gets to that key level. Right, moving on to the global indices, starting off here with the US indices. So I was talking about how they were stumbling a lot more. I want to see how they react against these old levels. Now, we still haven't really got back past this, but overall the recovery has been phenomenal. We did have a pullback into this resistance area, managed to recover from that since I last recorded a video, and have broken back up above the previous week's central pivot effectively, or at least its mean, and found support there and pushed a little bit higher. So this is still looking quite bullish actually in this case, and especially the S&P has done incredibly well and very beautiful, just having pulled back to an average prior week's mean. I beg your pardon, why am I stumbling so much? It is first thing in the morning after a long weekend, but having pulled back to the mean of the previous week's movement, the range, and taken off. Okay, so very, very nice, and really nice and strong and bullish. Now coming up towards the top of its channel. So yes, usually when it's the case now, the markets are looking at their most bullish. That's often when they have a bit of a correction. So yes, the where I'm going with this is that my approach is bullish yet cautious as always, but just noting how well the market has managed to push higher last week. And again, even here as well, you can see just nice and neat and clean price coming back into the previous week's average. The midpoint of that, almost like a 50% retracement, and then taken on, has done really well at this point. Of course, it's now overextended on the monthly, it's overextended on the weekly, blah, blah, blah. I'm tired of hearing myself say that. I feel like a stuck record. But again, I do always want to be cautious, especially at the point of when these markets look incredibly bullish. The daily is now overextended. The weekly is heading towards the top of its channel, not ridiculously overextended. The monthly is heading towards the top of that is now entering very overextended territory, with 16,000 kind of being in sight here over here. So this is what I'll be looking for this week. Any kind of pullbacks, even on nice 4-hour time frames, nice pullbacks into the moving averages, looking for buying opportunities to the upside. Should the market suddenly just fall and break below a daily low, then of course I start to get a little bit more cautious, and any alerts in that case. And I am just becoming aware that the market is now becoming quite overextended on the daily, and so what I'll be looking for on lower time frames is divergence, bearish divergence coming in on these indicators to give me any kind of heads up if the trends or the market is losing a bit of steam. Okay, so just exercising caution there. Very impressed to say, and this was something I spoke about as well, is the NASDAQ having been within a bit of a range here, but I was looking to see if it would break this high, which it has managed to do. That's obviously quite a nice bullish sign. It is still sitting within its range here, its monthly and weekly range, I beg your pardon, that exists. It's got a nice bullish monthly candle. It has actually, if you look at this in isolation, this is quite a bullish signal, or at least a bullish story. You can see the big moves up, and then as it starts to consolidate, it effectively finishes with a nice bullish candle off the moving averages, and therefore a breakout of here is a possibility. And if it is a breakout from here, then the implied story is that the Russell 2000 has got a bullish, kind of finish potentially going in up towards the end of the year. So this is going to be very interesting to me to see if that is the case, if it can succeed in breaking out of that level of resistance. The story so far looks like it's had a nice rest and it's ready to keep going. That to me is quite intriguing, because yes, it implies that there's that optimism, that bullish optimism. And so much for kind of sell in May and go away, because although we just had a bit of choppiness, we didn't really have a major market correction. And obviously the markets at this point in time are not too concerned about inflation. So, well, effectively, as I said, it comes back towards interest rate changes, and the market doesn't seem to be too concerned about that at this point in time. So, moving away from the US, looking at the FTSE, this one's still looking more bullish again than bearish. Let's see if it can continue on, but it has pulled back into these recent levels, some really nice levels, found support and continued onwards. So again, managing to push a little bit higher. So yes, I'm always prepared for the markets to do a bit of a correction, but I'm not at a point yet where I would be selling the market at all. excuse me, I'm certainly would be more focused on looking for buying opportunities to the upside. Just noting here again how that angle of price action is quite strong at this point, heading up sort of more of a towards almost a 40-45 degree angle. Then it starts to flatten out and there's a lot more candles here. So usually what you would get in this situation is bearish divergence. So if I just bring in the indicators, you would normally get bearish divergence because the market within this period has not traveled as far to the upside over, let's say, 20 candles as it did in the previous 20 candles. So it's clearly started to stagnate a bit and therefore is slowing down, and therefore we've got a bit of bearish divergence coming here. So that's interesting to me as well, just observing that, and yeah, want to see how that ultimately relays itself, expresses itself in price action. Looking at Euro stocks also, again, looking nice and bullish. A little bit of a correction here on that weekly, and now already producing a little bullish inside candle, wanting to continue onwards. The Nikkei as well, even here, this being interesting to me as well. We managed to break through this level. Can we get back up above this level of resistance here around the 28,000 mark? Back up, because of course here again you can see that monthly chart has managed to let off a lot of steam back in here, producing the very first kind of bullish indecision candle here. This is a very clear potential turning point to the upside. So interesting, because it's usually at points where the markets look at the absolute most bullish across the board that we normally have a bit of a correction. So I'm going to keep that in mind. But I have to say, I find it interesting that both the Russell, which has kind of been a little bit hesitant, now starting to show this the early signs of a continuation to the upside, and then looking at, say, the Nikkei, which has been kind of the most bearish of the bunch so far, starting to show signs of perhaps buyers coming back into the market to take it to the upside. So again, here what I'll be doing is looking for September to break the highs over here to see if we do continue to the upside there. And the ASICs, of course, which has been just a star performer for a while. Nice to see that having broken back. As I said, any pullbacks into 7,200 would be great for buying opportunities. You can see the daily here already getting ready with a higher low, potentially to break this next high and to continue, the previous high at around about sort of 7,542, and looking to continue that to the upside. Nice little bullish candle on the inside, bullish candle here on the weekly as well. So signs of green shoots, calling it that. Yes, barring some unexpected correction. Usually, and again, just to kind of wrap up on that, this is kind of where, if I go back here to these, where we've got, price kind of really overextended on the daily. Yes, there's a possibility of a correction this week, and I'm always watching out for those as pullbacks to see if those will provide me with entry opportunities to the upside. So at this point in time, the market's just having survived the last week and done incredibly well. So let's move on to the equities of interest. So starting off with American Express, which had a, this is a really nice weekly finish. There's a nice swing. I notice we haven't broken the high just yet, and we produced a bearish inside candle, which is not a great sign of a follow through. So that being interesting to me. This is, as I said, the beginning of a swing high. And so yes, breaks to the downside here support the idea, kind of a bigger correction. So I'm going to be interested to see how that ultimately goes. At the same time, that weekly having shed quite a bit of weight in this area, but not followed. There was no real kind of follow through last week. So that's interesting to me because that still puts these two kind of between a longer term correction and a medium term kind of continuation. So a little bit cautious on that. That's what I'll be looking for this week, looking to see if we do break these lows. If we break these lows, we're looking at a much longer term correction, which is obviously overdue, and we have started that process. Alternatively, should we just break the high, then we'll break out past these and we'll see a continuation to the upside, and that'll start to look more bullish. Arc Innovation managing to recover really well, these lows holding on, and again, a bit of a bullish indecision candle here, so that's looking good. I'll be looking to see if we break these highs here and we get that return back up to 130 or beyond, so that's going to be of interest to me. Berkshire Hathaway, let's have a look at this. So this, again, it also started a bit of a swing high. We had two lower lows, an indecision, and we've already got a swing low. So we've got a swing high, which immediately becomes a swing low. That's interesting to me as well, just because that points there's some definite resistance here at 293, let's call it that, and looking to see how that ultimately recovers. But yeah, I would expect that it's possible if it's going to continue upwards from here, we're going to start to see a nice little bullish formation here, and to see if we get above that 291 level again, that would be, I think, considered a win. Let's have a look at a BP PLC. So I've been relatively hard on these ones, just saying that, not expecting too much from them, especially if they do go the way kind of with regards of oil. and if they start to hit a little bit low, here's a little bit of a bullish inside candle here. So we have had a bit of a correction from this move up here, a bit of a correction. Bullish candle here. If we can break above the high of that, especially in September, again, we've got a higher low here on the weekly, then I would expect that to continue or to start to return back up to its old highs. Now, moving on to Coca-Cola. So Coca-Cola finding some strong resistance up close towards the sort of 57.50 area, having pulled back into these old highs, producing a nice little inside bullish candle so far. All of that, very nice, strong sign. And so, yes, I'm just noting that there is some strong resistance at these areas. Let me just go ahead and actually mark that up here so I can get some sense of that. So that is really the biggest challenge, is 57.22. Looking to see if we can get past that or close above it solidly, especially closing above these highs, and then look at see if we can continue to that. So we've broken these lows, which means there's no clear trend at the moment, which we can understand part of that weekly correction starting now. So what I'll be looking for this week is to see a break of the high of last week's candle, which would imply a continuation back up to those old highs. Alternatively, if we just fall through the lows, then obviously we're going to start to see a bit of a bigger correction, and this level will be more significant, but I'm leaning towards the former rather than the latter. ExxonMobil. So similar to my kind of criticisms of BP PLC, ExxonMobil, having pulled back down towards these moving averages, certainly is starting to find support in this area. There's no doubt about that. I think it's fair to say I can put a level in there. The market, having tested those levels, is now looking to see if it can break these recent highs. So if it can break these recent highs on the weekly chart, it's then starting to show evidence it can resume back up towards the old high. So really that's going to be its immediate challenge, just getting past this resistance over here to continue back up to the upside. If, on the other hand, it carries down, we break the low of this before breaking the high, then it starts to reveal that this move, this correction we've seen on the monthly isn't actually over yet, and it wants to head a little bit lower. General Motors having let off a lot of steam, so that's really good. You could see some of the kind of sellers starting to push back here a little bit here, or at least failure to gain or hold buyers above that level. And now we started to come back down into these pre-levels here below those levels there. So that's looking good. That just generally means to me there are potentially still buyers in this area. So we have a confirmed weekly downtrend there, lower highs, lower lows. And so what I'll be looking for again is to see if the weekly then just continues to break to the downside first or break to the upside first. If we can break these previous highs here or break the previous lows, that'll start to offer some clues as to which way the market is likely to finish the week. So having a look at JP Morgan Chase, this one, and it actually had done really well, bit of a correction and a swing low as well, very similar to Coca-Cola. Now it looks as though it is wanting to continue back up and to see if we can get past this level of resistance. But actually managing to hold, not bad. Let's have a look at Morgan Stanley. So Morgan Stanley having done incredibly well so far, that weekly looking really good. Daily so far offering some bearish divergence. So here you can see bearish divergence on both indicators and around that 105 level. So again, to me, going to be interesting if we could continue onwards. There's some divergence here implying that there's likely to be a weekly correction at some point in the near future, either in the next couple of weeks. So let's see how that goes this week. Again, I'll be looking to see if we break that low instead of the high, but we are at the top, at the upper ends of the channel. However, overall, this is looking way more bullish, and considering I've kind of marked it here as relatively bearish, it's actually performing incredibly well. So I'm quite happy to eat my own hat, as the expression goes. I just want to categorize these as bullish or bearish or strong or weak as we go. Now, having a look at NVIDIA, which has kind of been a favorite, that's a really nice bullish setup here. We followed through on these highs. Now we're obviously starting to enter overextended territory, similar to kind of this price action being reminds me a little bit of Bitcoin. So we are starting to enter that, and possibly the market is aiming at a nice round number, 250, for example, before having a bit more of a correction. That daily here looking as though it might potentially at some point want to retest these levels. So any kind of pullbacks here could present some buying opportunities without actually doing too much on that weekly chart. So all of this, again, this so far looking nice and healthy. So far, NVIDIA looking healthy and bullish. PayPal, let's have a look at that. So PayPal having produced a really nice swing low off these previous highs here, which is usually in its own way a good sign. But no doubt, again, some strong resistance around about that 309 area. So I want to see how market reacts when it heads up towards that. I'm expecting this to head a little bit higher before heading down. So Royal Mail, having had a really nice correction, now starting to slow down. So this is good. That makes me happy. We needed to have that. We've come back in towards 500, in towards these old highs. And so actually in this area here, I'd be looking for a nice little bullish finish in September. or even perhaps a bullish finish, but it would have to be in the next 24 hours or so. So looking to see if it can hold above this level of support and perhaps start to work its way back up into an uptrend, certainly on that weekly. If it isn't done with that and wants to continue back down towards 430, but I think where it is now, certainly this is not a bad area for it to find a bit of a floor. Then on to Spider. SPDR. So this one just, I was producing a bit of a bullish candle here. We didn't follow through on that, but we've produced another bullish candle. So buyers definitely starting to re-enter the market, that area of support. Managed to breach a little bit. Now we're back up above it. We've broken these previous highs, looking more bearish, more bullish than bearish. So that's going to be interesting to see if we can break the high of that and then start to work our way back up to the old highs. So getting, just kind of in terms of summary, I've got, two more here to go, and then I guess I'll sum it up. So I spoke about this was just an old kind of approach. I was saying that if we did start to see a bit of a bearish pattern forming here, and we've definitely now broken out of that. So that is absolutely not that. There's no longer term sort of breakdown or breakout to the downside forming here, so that's good. We found some nice support off this area. I was saying we'd either find a nice overdue correction into this area as a shallow retracement or deeper retracement, which is almost similar to a 382 or a 618, for example, coming down into these areas here. Looks good. We've got a nice confirmed uptrend, relatively steady on the weekly. Tesla looks at this point, I wanted to get past these old highs, but it does look pretty much as though it is now resuming its previous uptrend. Okay, it looks like it's going to go back, try and head back up towards its old highs. Vanguard as well. So, a lot of this really just telling the story that so far the markets are showing, visually at least, technically, the kind of grass or green shoots, or the possibilities or the potential for continued moves to the upside, almost like a renewed vigor, a renewed uptrend, which is interesting to me because usually, we've been stumbling a lot recently, and we now appear to be showing that potential to be resuming our way to the trends to the upside. Cool. And finally, let's go see how the kind of bond market is reacting to this. And so just mentioning this price having pulled back into these previous lows, bit of a bearish indecision candle at this point in time. So really it's a very general rule of thumb these days. I think in Buffett's early days, it would have been a hard and fast rule, but these days, because it's just more cogs in the system, one of the clues that we might look at, for example, is the kind of interest in buying bonds. If there's if anyone is in a kind of big companies or institutionals are looking for, kind of looking to take an off-ramp out of equities. But at this point, there's not really a lot to support that. But they're not looking as bullish as they were a couple of weeks ago. So there's some levels of support here. And a little bit more caution for me this week in terms of these Euro bubble as well. They've had a good move to the upside, a little bit of a correction here. So just looking at that, seeing that there's no doubt a little bit of resistance at the moment, which wouldn't be the case if equities were looking really weak and bonds were of interest. Then I would expect them to start really breaking through those ceilings. Not happening at this point in time. Okay, again, also here, Eurobond as well, having had a bit of a move up, and for September, so I beg your pardon, for August so far, having produced a bit of a bearish indecision candle, finding some strong resistance. So not seeing a huge amount of interest in treasuries at this point in time. It just, again, that supports, the market's still looking a little bit bullish. Interesting, just very interesting to see that being the case post the Jackson Hole Symposium. Now, Bitcoin. So Bitcoin obviously encountering a bit of a bump at 50,000, which is fine. It's had a really good move from 40,000 up to 50,000. It's almost created a bit of a swing high there on the weekly. So for me, that's going to be interesting. Do we get a nice bit of a healthy correction back down to 40, back down to test this level of resistance as support, and then a continuation back up? If we do, perfectly acceptable. In fact, I'm very happy to see that. If that is the case, that would be a nice little way down here, and then like a move down and back, and a re-entry buying opportunities again, if that's the case. So let's see. Alternatively, any breaks above that 50,000 this week, any moves to the upside and retesting that level of support or buying opportunities. So the move to the downside to me is still considered relative. I would still consider that relatively healthy, not too much of a concern. Let's have a look at NEO. So NEO showing some sort of similar signs of a potential swing high at that level of resistance. So to me, I see most of this being as a medium-term kind of a correction after a nice move up, and potentially just looking to calm down a bit in terms of its longer term move to the upside. I'd love to see, instead of seeing these parabolic moves, but to see a bit of a move up correction to me, which would be a much more sustainable, more a longer term kind of behavior within the markets. Okay, Ethereum. So similar expectation here, but Ethereum has done incredibly well. I'm very proud of it, very happy with that. Yes, running into some resistance here around that 3.3 level. And again, any kind of just a minor correction into these previous highs for me would represent really healthy, normal, nice, longer term sustainable ability. Okay, even Cardano here, big moves up. Any kind of a pullback here would be able to let off some steam. And so quite happy to see that. Dogecoin, which by the way, I only include in this list for fun because everybody else does it, but why not keep an eye on it? Again, you can see how price pulled back into these previous lows here, coming again here to find support in this area, see if it's going to continue to the upside and finishing off with Ripple. Already Ripple looking like it wants to let off some of that pressure, just coming in even here down into, let's put in a couple of levels here and see how that ultimately plays out. So I'm going to put in a couple here, and then I'm just going to put in on these old highs down towards here, and just see where, if we do find some support in this area or potentially in these areas, and then continue to the upside. So there we go, ladies and gents, thank you very much. I hope you have a fantastic week trading. There are some potential opportunities in the markets this week, feeling a little bit more optimistic about that. And yes, I'm looking, if you have any questions or feedback you want to give me, please always just put in the comment section below. Thank you very much for your time and have a great week.